LTIMindtree is the stock on our radar. The company has entered into a joint venture with Saudi Arabia-based Global Digital Integrated Solutions, in which the company will invest almost $12.5 million for a 51% stake. To discuss more on this development, we have Sudhir Chaturvedi, the President and Executive Board Member of LTIMindtree, joining in. Sudhir, thanks a lot for joining us this morning and being a part of our discussion. First, on this particular agreement that you've signed, can you tell us a little bit about what is the rationale on this? What is the opportunity that you see for the company?
Sure. And good morning to you, and thank you for taking the time today. We are very pleased that Saudi Aramco, which is the world's largest oil company, selected LTIMindtree to be its JV partner to set up this. What is a path-breaking JV for them, in terms of setting up a JV for IT services and digital solutions that be provided initially starting with in KSA and then further on to the MENA region. Now, just in terms of market size, the KSA market size today is approximately about $14 billion, but it's growing very, very fast right now. It's the fastest growing technology market there. And the overall MENA market is about $60 billion. So we expect that this overall market by 2030 will be close to $140 billion, and easily, as I said, the fastest growing market in the globe. And the rationale for this JV is to essentially bring the synergistic capabilities of the two companies. Aramco with its obviously it's the powerhouse in Saudi Arabia and extremely well known across the MENA region. So they will bring essentially their connects within the business community, and LTIMindtree will bring its capabilities and its essentially its solutions and tooling to the JV. Just in terms of the amount that you mentioned, that's only for year one as we set up the business, but there is a plan to keep investing further in it because a key tenet of this is to create a local IT services company. So there will be significant presence in Saudi from a localization perspective. We will be setting up regional hubs in Riyadh, in Dammam, and in other places as well.
Got it.
So huge investment over the next 10 years from both sides to make sure that that we create the essentially the premier IT services company in the KSA.
Got it. And I understand the potential. I mean, Riyadh is the big hub right now as far as investments, global investments are concerned, ever since the opening up of the economy. So I get that. But just to understand, this is basically you're trying to increase your presence in the MENA region. How much does the MENA region contribute to revenue right now? What is the kind of growth that you're looking at from that region over the next couple of years for your own business?
So, I think at this point, the MENA region is part of our overall, essentially what we do across India and Asia Pacific, but what we are now doing with this JV is creating a specific entity that is focused purely on MENA. We've already had a very significant presence there. In fact, we've built on the back of the L&T Group. The L&T Group has a very strong presence especially in Saudi Arabia, and they've a very large order backlog, as you're probably aware of, in the region, as well as they've set up local offices, local factories. So what we're doing is we're building on the legacy that L&T Group has created to do the same thing from an IT services perspective. As I said, we already have quite a significant business with Aramco themselves, with the banks in the region, with insurance companies in the region. And now together we're looking to target the ministries and the giga projects. So projects like NEOM, Red Sea Global, there are various, there are at least 20 giga projects that are underway, and each of this will require very significant investment in technology. So that's the combination that we're going to bring together to start with, essentially with energy, BFSI, giga projects, and government ministries. We'll start with KSA and then expand to the MENA region.
All right. Hi, Sudhir. Good morning. Good to see you in. Nigel on this side. But could you give us a number as a percentage of your total revenue mix? How much does MENA contribute? And since it's growing at such a fast clip, where do you see it headed?
Well, we don't, disclose specific by geography, but what I can tell you is that, for us, the India and Middle East, the Middle East market has always been a very significant market. As I said, we built on the legacy of our, of our parent that has always been very strong in that region. I think we are probably, if not the largest, certainly among the top two in the region already. And those credentials were very important in terms of, us being chosen as this JV partner. Because I think what they wanted to see was commitment to the region. How much is someone willing to commit to the region in a way that we can jointly develop a completely new digital infrastructure for the country and then expand beyond it.
Okay, all right. So you're giving us more qualitative details rather than quantitative. So we'll stick to that. How's the quarter shaped up, though, for the company on the whole? Quarter three, I think you all had hinted that will be better than quarter four will be better than quarter three. Has it shaped up on those bases?
I think we said that, quarter four will be similar to quarter three is what we had said during our earnings call in Q3. I think we were continuing to see that. I mean, we continue to see caution in the environment. In fact, in all markets except perhaps the Middle East, where we're seeing, sort of easily more than double-digit growth in that region, and that's partly one of the reasons why we're investing so significantly there. I think one part, Nigel, that I'll add is to partners of ours like AWS, Microsoft with Azure, and then Google. All of these guys, SAP, Oracle, ServiceNow, they're extremely excited to see us making this kind of investment commitment to the market because they need a system integrator that they can work with on all these major programs. And we are the first mover here. And clearly, as I said, once you have a tie-up with Aramco and that to a JV, and this JV was blessed by both boards, right? So, imagine the Aramco board blessing the JV. So this is that significant. And I just want to make sure that, this was one of our key objectives in Q4 was to get this deal done. And we're very happy with that. In terms of the overall environment, I think, we're going to continue to see caution, but I do see some green shoots starting, but there is ways to go there.
Okay, Mr. Chaturvedi, hi, good morning. Just to zoom out a little bit, when that LTIMindtree, the merger happened, LTIMindtree, at that point, there was indication given that there could be the potential synergies worth about, I think, $1 billion and 200 to 400 basis points improvement in margins over the next 4 or 5 years. We are still early into that, right? I think just about 2 years in from when that kind of guidance was given, broad guidance was given. Are we kind of broadly still on track for that? Or do you think the environment perhaps has turned a little bit with discretionary spends, etc., looking uncertain, as you've highlighted during your quarterly meetings?
No, actually, yeah, you're right. I mean, in terms of, the plans that we have for the LTIMindtree, the business case that we had for the merger, that is still, maintained. What we are seeing, in fact, I would say point out to 3 data points, right? If you see our order book, our order book continues to, grow significantly. We're now at around $1.5 billion a quarter in terms of order book, which is a good 25-30%, in some cases 40% premium over our quarterly numbers. And the other aspect of that is that, we're actually being invited to a very significant number of large deals. So, which was the other merger thesis that, we'll get to play with in a larger pond. And we've got just over $4 billion worth of large deals that we are currently bidding at. And the third thing was that partners, the large tech partners, the hyperscalers, the SaaS providers, the ERP companies they would see us in a different light with the scale that we had. And those 3 synergies have already materialized. Now, in terms of revenue growth and margin, yes, the impact of the market has been there. We've faced it as well, along with our peer group. But I think, as the market returns, because we've got some really strong fundamentals in terms of, as I said, order book and large deals. And the last but not the least, our customer satisfaction is extremely good. So post-merger, our first priority was to make sure that our clients saw no disruption at all. And that's something we've achieved really, really well. So in fact, our recent, CSAT dipsticks show that clients are extremely happy with the way the merger has been executed internally because they've not seen any disruption. And frankly, that was step 1. And then, as I said, building on the rest of the merger thesis.
Just one other point. Is it maybe because of the environment, but also because your exposure to what we call discretionary spends is higher? Is that perhaps one reason why growth over the last, say, 4 quarters has been a little tepid? I mean, is there an additional point? And what can you do in terms of adding to your service offerings? Maybe greater sort of inroads into the ER&D space, Is there any change in direction that needs to happen, or you're well set? And it's just the turn in environment which will sort of help you? Yeah.
Yeah, I think what we have seen is, the discretionary spend has slowed down. That does impact projects in digital engineering, in e-commerce, in customer success. The kind of programs that were essentially designed to drive revenue growth have been, sort of the spend on that has reduced, and that has had an impact on us. Now, in terms of us, looking to make sure that, we've got a good balance between annuity revenue and project-based revenue. This is where the large deal footprint comes in, So amongst, I was talking about the $4 billion plus pipeline that we have in large deals. That's, about 80% of that pipeline is annuity revenue, which is cloud, infrastructure, security, applications, data. So these are the areas that we are already seeing a lot more traction in terms of large deals. So the book of business is already balancing in terms of, more longer term annuity deals. And we'll see the benefit of this in the coming years. But we want a good mix because, what we do want to do for clients is to not just save the money, but also to be able to make sure that, we leverage those savings for true digital transformation. Because most clients have actually slowed digital transformation down. You cannot stop it. You have to continue with that process.
Got it. Mr. Chaturvedi, love to go on, but out of time. So thank you so much for joining us and taking us through that conversation. Good luck to you, and hope to speak with you soon again. Thank you.